Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Yang, good afternoon. Thank you for coming on, as always.
Happy to be here.
We had a brief wrap-up just a minute ago, but last week's stocks on Wall Street closed lower yet again with the monetary tightening by the Federal Reserve. The Dow, in fact, now is below 30,000 points at its lowest in 2 years. Tech shares on the Nasdaq off by 1.8% on Friday. Where do we stand in the global markets at the start of a new week?
Okay, well, the Fed's announcement not only of the 75 basis point increase, but also its intention to continually raise the rates aggressively. So we can probably look to another 75 basis point rise in November and another 50 basis point rise at least for December. That seems to be playing havoc with not only stock markets but currency markets worldwide. Now, for the United States, as you mentioned, on Friday, the three main indices fell between 1.6 to 1.8%, and it was the fifth negative week in the past 6 weeks. And then for the week, Dow lost 4%, S&P lost 4.65%, Nasdaq by 5.07%, and year-to-date, Dow has lost 19.1%, S&P by 23%, and Nasdaq by 31.4%. Now, the September is not quite over, but Dow and S&P have lost about 6% during the month of September so far. Nasdaq has lost about 8% so far, and Dow and S&P are only slightly above their lows in June. Nasdaq is only about 2.9% above their lows in June. So the U.S. market analysts are saying that the increasing interest rates and the lower the trend for a lower stock market is going to test the lows that the market had seen on June. On Treasury bond front, 2-year and 10-year Treasury bond rates are hitting highs not seen in over a decade, 4.27 for the 2-year bond and 3.69 for the 10-year bond. And small business loans are expected to hit 9% in the United States, and that rate will hold for a long time. Goldman Sachs cut year-end S&P target, predicting that the S&P will drop another 4% by the end of the year, and consumer discretionary sector stocks have fallen by 7%, energy sector by 9%, as oil prices are dropping and big tech stock prices are dropping as well. Another point that was made during the Fed announcement was that we will probably not go back to the low interest rate era that we saw during the pandemic. Even when the interest rate is normalized in the long term, it'll probably be around 2.5%, the so-called neutral rate, and we will probably not see the type of interest rates that we saw in the last couple of years. Dollar index has hit a 20-year high at 112.96, and as you just mentioned, euro is now down to about 97 cents per dollar, and for Europe, the DAX, CAC, and FTSE was down on Friday. Today, market just opened, and CAC is slightly up, but only very slightly. The UK pound has hit historic lows. It fell 3% to $1.09 per pound, and euro and Asian currencies are down as well. The Bank of England has raised the rates for the 7th time this year by 50 basis points, and UK may already be in a recession, and Swiss raised interest rates by 0.5%, ending negative rates in Europe. For the Asian markets today, Nikkei, Shanghai, and Hang Seng all lost. Last week, inflation in South Asia numbers came out. Malaysia was 4.7%, Singapore was 5%, so inflation is going up everywhere. But the interesting point is that China and Japan are sticking to their loose monetary policy. The inflation for those two countries are still in 2% range. But for Japan, yen is losing value very quickly. Reportedly, there was an official intervention last week but still the Bank of Japan is holding their rate minus 0.1% for short-term and 0% for long-term bonds.
Right, and the pound you mentioned quite extraordinary, down to around $1.03. Well, in the meantime, a massive decline for Korean stocks today. The KOSPI off more than 3%, the KOSDAQ 5%. The KOSPI is at its lowest in more than 2 years, around 2,200 points, and the KOSDAQ falling below 700 as we all watch the Korean currency basically in free fall. Tell us about the domestic market.
Okay, well, for KOSPI, individuals and foreigners have sold, but foreigners have only sold a very tiny amount, 5.8 billion won, so you might as well say that they're holding level. And for KOSPI, institutions bought. For KOSDAQ, individuals sold, foreigners and institutions bought, and Korean won has lost a whopping 22 won, or 0.92%, and it's now at 1,431 won per dollar. The loss in the stock market seems to be from individual investors who are in a panic mode, and that's probably due to the rapidly declining exchange rates. I think a lot of investors are counting on President Yoon coming back with a currency swap with the U.S., but that did not take place. So there always has been a fear that once the rate hit 1,400 won per dollar, we'll see an acceleration of depreciation of the Korean won, and that may be what we're seeing right now. And it has, I think, more to do with panic than anything else. Other currencies also lost value today, but not nearly as much as the Korean won, with the exception of the British pound, which lost more than 1%. On the other hand, it does seem like a bit of a good news, which is the oil prices have fallen as well. It's now around $78 per barrel, and even natural gas, the prices are falling. This is one of the consequences of, I think, the Fed raising the rates very quickly and the general gloomy mood around the world. They're expecting a global recession coming up, and Korean investors are no exception in feeling the pessimistic mood. But it's also been, I think, coupled with panic because of the depreciating Korean won.
Indeed. And this week we'll have consumer data for September from the Bank of Korea. Last month we saw consumer expectations for inflation come down for the first time in a while. So a big question is whether that continues. What's on your radar in the week ahead, Professor?
Okay, well, on Tuesday we have September consumer trends, which includes consumer confidence figures. On Wednesday we will have the Korean domestic population movement numbers, and then on Thursday we have the business confidence numbers as well as the export and import price indices in terms of trade. On Friday we will have financial institutions weighted average interest rates for Korea, as well as the August industrial trend, including consumption, investment, and production figures. For the foreign statistics, I think the most interesting things will not be statistics per se, but the various Fed members are going to have a lot of speeches scheduled for next week. Some European Central Bank members as well. So I think everybody will be keeping an eye out on what kind of signals the central bank will put out. But for the United States, on Tuesday, we have the consumer confidence numbers and the new home sales numbers. And perhaps, well, I'm not sure if there's going to be any surprise in these numbers, but on Friday we have the U.S. personal consumption expenditure and personal consumption expenditure inflation figures, which are used by the Fed, their preferred inflation measure. And on Friday, the Eurozone will publish preliminary consumer price index inflation numbers and unemployment figures.
All right, Professor, we'll keep an eye on all that and check back with you later in the week. Thank you, as always, for making time for us. We really appreciate your insights.
Thank you.